Hi, this is Brent with Trade Therapy, and it's time for another chart breakdown supporting our Clarity Spotlight on Palantir last week. Today is Monday. It is March 10th. It's about a little after 7 o'clock Pacific time. Apologies for dropping this video a little late today. Family and I were out in June Lake skiing this weekend and got back a little late, so apologies for that. This is the first chart that we shared for Palantir. This is a clean weekly chart. It did include the volume profile here, just to show that we do not see, although we do see some elevated volume here. We don't think this is not distribution. So this was distribution previously. Here's reaccumulation after an accumulation of clearly accumulation phase right here that went through what's probably going to end up being an abbreviated reaccumulation structure here, because I think as it gets into higher levels longer term, we're going to see it reaccumulate later. Clean weekly charts, always good to get a feel for the relationship between price and the moving averages. Does it look extended? It does right here. It sure does look extended right there. So to see it drop back after such a strong run right here is really not too surprising. If we take a little more detail under consideration and drop in a little Elliott wave count here, a pretty clear five-wave structure, one, two, three, and then a long four that ended up being a one, two, three, four, five, completing one, and then a two. And we see this really sharp move right here. Very typical of wave three. I think we pointed it out in the spotlight last week. This is why we get so excited about wave three, and we talk about higher time frame three wave cycles, because wave three does have the tendency to be the longest and steepest wave within a five-wave impulsive structure here. So we did identify this support right here at 80. Did say if we were going to see a bullish outcome heading into this week, we would expect a bounce here. If it loses that, then we do expect it to come back down here and possibly even try to come after this candle right here. So we do see negative divergence develop. Similarly, we saw negative divergence develop after wave three here. So that does give us a little more information to evaluate and decide whether or not we're looking at wave three here. I'll get back to that a little bit later. Let's jump over to the monthly chart. We do talk a lot about in trade therapy content about how useful monthly charts are and looking at the bigger picture, the longer term trend. Is there anything that looks concerning when we look at a monthly chart? There's one thing that, excuse me, two things that jump out on this chart. Obviously, everyone's going to see this resistance line that provided resistance, and then broke here and then came back and closed underneath it and has now provided resistance, and price is now pushing back off of it. So this is an extremely concerning candle right here. This is a shooting star candle on very high volume. We talk a lot about in trade therapy content, the critical aspect of analyzing volume. It's really the only thing you can trust in a chart is volume. It tells you whether or not institutions are buying or selling. Although this is a big white green, it's a green candle. We display it as white. Although this looks like everybody's buying, and a lot of retail investors that don't understand how to read candlesticks and or volume will think that, oh, they're buying it because Palantir's such a cool company and they've got such a great future and AI is the way of the future. That's just not good analysis. This is clearly profit being taken here. This is Wall Street and institutions not necessarily dumping their complete position that they accumulated here, but they are taking profit here, and it's very obvious. If we jump over to this is a live shot today of today's chart. We can see that we already in day one of this week lost the support at 80. Not surprised. We had a very weak day in the market. So not surprising to see this support level drop so quickly. This does open up this low right here, which also sits right at the 30-week simple moving average right here. If I were long here, I would be watching this position right here and this. See how strongly they defend this low right or this low right here. This is a long position. Each one of these, each one of these lows that is extending away from the general price trend that backtracks and touches these moving averages. These are long positions. This is profit being taken by institutions, by hedge funds, by larger traders, larger operators that take profit on extensions away from longer moving averages and then reload at the moving average. So it's just this is the nature of uptrends. We're about to, all signs are pointing to an extended uptrend, a markup period, not only for Palantir, but also across the growth sector as well. We've talked a lot about that, and that this is how phase E looks. This is what a markup campaign looks like. It extends away and then backtracks to moving averages, extends away, backtracks. That's what all of this is. It's gotten very extended away from the 200 weekly moving average here. We talk a lot about in trade therapy content. Keep an eye on the 200 weekly exponential moving average. If you see a long extension away from that, and then you see a high volume, small bodied candle, which we did right here, that is a very small bodied candle, and that is and that's above average, and that is volume escalating here. So as price extends away from the 200 weekly moving average, you see volume starting to creep up and picking up because Wall Street's preparing to take profits, and that's what they just did here. We do see very high volumes, three red big volume spikes. These are dark gray in our palette, but those are red candles. But again, you see a small bodied, a smaller bodied high volume candle. If we look in a little closer here, you see that is a very small body, and this is a whole lot of volume. So what does that tell us? Well, retail doesn't have that much buying power. They're not buying up all of this, but this level was defended. So institutions that maybe came in a little late are still trying to defend this level. This does look like a wave four correction that should be a one, two, three. It's quite possible it stops right here. You know, there's no it's not absolute that it needs to come down here and test this low right here. You see there's a couple of dojis right here. This is very strong support. So if it does get down here, would look for wave four to bottom out in this area right in here. Bounce off the 300 weekly simple moving average. If it loses that, and it might, they may try to come down here and penetrate this candle right here. We talk a lot about inefficiency in the chart. We do believe that Palantir does have a very bright future ahead of it. We do have a very bullish outlook on Palantir long term. So it does make sense for larger operators at Wall Street that is looking to reload this position. They just took a bunch of unrealized gains off of the table right here. So they did sell a lot of it. So they will be reaccumulating it. The only question is this support going to be strong enough for them to reaccumulate here? Keep a close eye on volume. Volume always tells the story. We do think if it does catch support here, that it will extend up into a wave five. Quite possible we get some sort of a positive earnings reaction in May to take it up to the 1618 Fibonacci extension. If it gets up there, watch volume because they may have just taken their first round of profit right here. And as it extends up to the 1618, it may exceed it slightly and then come down and go sideways here for quite a while they reaccumulate this position. We'll see. We do see this is bullish divergence. So we did see bearish divergence or negative divergence right here. We did get the negative reaction here. So we are now starting to look at this positive divergence here. Does it come down here and test this low? That would cancel out this bullish divergence at the moment. Now, it could do that and extend down here and possibly create some divergence down here somewhere. That is possible. But for right now, those are your keys. Your keys are to watch volume. Watch this low right here and how it holds the 30-week simple moving average. If it loses that, you can pretty much bet they're going to come down to at least a 50% retracement of this candle right there. And that will complete wave 4, and then we'll expect wave 5 to take it back up to the 1618 level. I hope that was helpful. Hopefully, everybody had a good trading day. I know there's a lot of volatility, a lot going on. We see a lot of charts that are grotesquely oversold right now. Uh, Watch volume, watch trend lines. What we're seeing is a lot of low volume sell-offs. I think Wall Street taking advantage of the headline-rich administration that we've got right now. We still have we're still expecting a bounce in crypto that could come at any moment. We do think that this is a very headline driven market, so we could get as bearish as the headlines have been for the past couple of weeks. Tomorrow we could wake up to something very bullish. So hope this video was helpful. Again, apologies for the late delivery, but hopefully it was helpful. Any questions or anything, drop us a comment. Thank you.